What is going on, guys? It is Filmington. With me, I have special guest Chris, a good friend of mine, Cardi-C, who has actually on his channel, he's covered various aspects of CLCT, parent company, as well as PSA. So there's a link in the description to his channel if you want to check out a little bit more. But we are getting to this breaking news as of this morning. CLCT, who is of course, the parent company of PSA, there is news that there is an acquisition in the works, and the parties involved being Nat Turner, who's a very well-known collector. If you guys don't know who Nat Turner is, he's also an entrepreneur, and he's in the works with D1 Capital Partners L.P. and Cohen Private Ventures LLC, the investor group, and they're together going to acquire all of CLCT's outstanding shares of common stock for an agreed upon price of $75.25 per share. And there are no finance contingencies, and this is set to hopefully go final next year. That's when all of the current shareholders will be paid out the $75.25 per share. What do you make of all this, Chris?
This is the biggest news to happen, the biggest transaction to happen in the hobby in all of 2020. And I think it can be traced back to Alta Fox Capital Partners. Back in the summer, they're a big activist investor in collectors universe. I had covered sort of what their activist investor shareholder letter really led PSA to do in terms of changing their operating mentality, how they're looking at their customer base and how they interact with people. But part of that activist investor letter was a call to replace legacy board members with people that really foster innovation inside the hobby and out. And on their short list was Nat Turner. So I think that Alta Fox Capital was actually the group that put this idea in Nat Turner's head that like acquiring PSA was going to be an option. I think we're going to talk a little bit about how this impacts collectors, but gone are the days where we're going to be able to see Collector Universe's financials. All that's going to be taken private in Q1 2021. And PSA will enter into a period of massive capital infrastructure investment that is ultimately going to come out in a highly automated and innovative approach to card grading and potentially sort of the spinoff of their legacy coin and collectibles business.
Good stuff. And thanks to everybody that's joined live. And I think I missed this part, but the total the market cap or the total agreed upon amount of the sale was $700 million, which seems like it's a lot of money, but I know you've covered this in some of your various segments on CLCT that, they're really not a huge company yet.
Yeah.
And so do you think that's a good purchase price given what is to come, or what are your thoughts on 700 million?
I think it's fair. PSA as a brand has a stranglehold on the grading card market at this given point in time. For people that don't know my channel or about me, I am a certified public accountant. My day job is to audit really big companies. And the sort of companies that we focus on typically have a minimum market cap of $1 billion. So my firm wouldn't even cover someone like Collectors Universe. But I think we're quickly finding out that the total market cap of the sports card market as a whole is untapped. And there's just so much upside potential for the investor group that Nat Turner is leading. And just talking about the premium that they had to pay over the current stock price today, what you need to do if you're an investor coming in trying to buy out a public company is you have to give shareholders an incentive to accept your offer. And if you're a shareholder sitting there at $60 a share and you circle back 12 months ago and that was $15 or $20 a share, you've seen sort of a parabolic rise in the stock price like we've seen in the card market as a whole. Any investor group is going to have to offer some significant overpayment in order to convince the current shareholders to accept sort of the buyout offer that they've submitted. And I think 30% is enough to do that.
Yeah, that makes sense. So actually, I mean, leading up till today, the stock price was what, around like 72 bucks. So it's not a 30% premium, is it? Isn't it just like $3 or $4 over today's starting price or Friday's close?
Yeah, so where I was getting the 30% from, I'm looking at a Yahoo Finance article.
Okay.
The transaction represents a premium of approximately 30% over the company's 60-day volume-weighted average price ended on November 25th.
Right. Got it. Like you said, parabolic growth over the last, it's, what was it, in the lower 20s 6 months ago. So yeah. Mm-hmm. So it's definitely well above the weighted average over the last 3 months or 6 months or a year.
Mm-hmm. Yeah, what's super interesting to me is when you see a company that gets taken private, it's often because there's so much pressure as a public company in order to produce the returns required to pay a dividend out to shareholders, to operate the company in such a way that produces a return that is palatable to shareholders to keep the stock price up. But what you do when you take a company private is you take all of those pressures away. You give the company the permission to operate at a loss for a couple of years, invest heavily into research and development, and be able to sort of pull back, almost like a slingshot, pull back as they're investing in the company, and then rocket forward. So the growth that we're seeing now is nothing as compared to what we could see in the next couple of years, given sort of the right environment and the right investments made by this investor group.
Right. So I guess that leads us to the next topic. So is this good news for the hobby? Is this good news for hobbyists, collectors, investors, those of us that own PSA slabs? What do you think?
So I think it could go a bunch of different ways, but what gives me faith that it's going to be good for collectors and hobbyists in the long run is that Nat Turner is at the helm. I don't think he is a sort of a poster boy for this investor group. I expect him to be pretty active in the sort of not day-to-day operations, but your strategic oversight and vision for the company. I was doing a little bit of research before we hopped on the call today about what Nat Turner has invested in the past. And his MO is seeing dysfunction in markets and coming in with new and innovative solutions. So he was one of like the angel investors in Blue Apron, sort of your first home meal delivery service. He's invested in a lot of sort of tech healthcare type investments. He is going in, he's seeing market inefficiencies and where he can use his background as a tech innovator, a digital innovator, a web innovator to take the whole process and put it on its head. So you take that and balance it with he's probably the most well-known wealthy collector in the hobby. And I think you have a recipe for long-term sustainable growth at PSA that's only going to impact collectors and hobbyists, investors, flippers in a positive way over the long run.
Got it. Yeah, and I know you had covered in one of your previous videos perhaps there being interests that weren't properly aligned when talking about the board of directors that sit at the helm today, which for the most part won't be there in the future. Now, Joe Orlando will be retained, so take that for what you will. I'm sure we can spend some minutes talking about that, but it seems like the interests of hobbyists will be more aligned to senior leadership more than ever before, versus kind of what's going on now where, they seem to be committed to growth, but is that just what they're trying to say? Do they mean that? Is that just lip service based on AltaFox coming in hard and them hiring consultants. There's really no reason why we wouldn't see change, I feel.
Yeah, if you haven't checked out my video recapping CLTC's Q1 earnings, I'll give everyone sort of the TLDR. For a public company that has a market cap between $500 and $700 million, they didn't really have a lot of access to capital. They had some room on their line of credit that they could draw down from, and they were building up their raw powder. So that's essentially just the cash on hand that they could use for investment, to pay the day-to-day bills, for stock buybacks, dividends. But $30 million in cash for what PSA has told collectors they're going out and trying to do is chump change. You can spend $10 to $15 million on a consultant to come up with a plan on how you want to sort of overhaul the operations. So I think you really need $50 to $100 million in hand in order to be able to do the types of things they're talking about, between robotics process automation and having robots grade cards. And I think a lot of it has to do with just like the way your cards move around the facility when it gets to PSA. Let's not forget that this is the company that still accepted paper returns or paper order forms until a few months ago. So when they're coming out and saying we're exploring robotics, I think historically the last few months, it's been a lot of lip service. But now that they have the capital, the strategy, the vision, the leadership to make it happen, I think the timeline for those types of decisions has just been expedited tenfold.
Yeah. So you mentioned access to capital being something that was more of a barrier in the past. Is there anything that we should be worried about that the company is going private? Is there anything that will make things more difficult to run operations? What are your thoughts there? Any risks?
I don't think so. I think it allows the company to sort of pull the curtain forward instead of back into their operations. So like what we're seeing at SGC and BGS, I think is a lot worse than they're leading on, but there's no public filings. There's no press releases. There's no required communications that they have to give us. So we don't have a true idea of what's going on. PSA has come out and said that they have over 1 million cards in their backlog. And my take on that is they're maintaining that large of a backlog to sort of manage their earnings. And I think that is sort of a bridge for them to be able to get through this period of investment in innovation before they're ready and able to roll out sort of robotics grading or an enhanced user experience on their website. So there's the potential that there's going to be disruptions to the collector. I don't think we're going to see price decreases unless you see like there being two different services. Maybe you could send your cards to get graded by a robot or an application, or you could get your cards graded the legacy way by a historical grader. But I think beyond taking a card and sending it out for grading, we have to be thinking bigger picture, almost like what Netflix did to Blockbuster. How crazy and different would the hobby be if PSA came out with an application? We could take our phone, scan a picture of the card, that card gets logged into PSA's system and graded on the spot through an application with your camera. I think those are the types of solutions and innovations that AltaFox has been looking for as one of PSA and CLTC's biggest shareholders, but they haven't had the leadership, they haven't had the guidance or direction to make it happen. And now they got sort of all these pieces coming into play. And we can see, I expect to see PSA playing around and trying out different ideas and different solutions, sort of throwing shit at the wall and seeing which idea sticks.
All great stuff there. Yeah, would take quite a bit of transformation, but I think that idea is a really good one, and I think at some point we're going to get to some deeper level of automation and AI involved in the process, RPA, et cetera. How long is it going to take? Is there going to be some market resistance to that? Of course, at first, but then eventually, you describe two service levels, one for the human, one for the robot. Well, the robot might be cheaper at first, but eventually a robot will probably be the one you want to get eventually to get their opinion on it. Well, I guess it's not really an opinion if it's a robot, but so what do you think about the news of Joe Orlando staying on board? Does that surprise you at all?
It doesn't, because I think Joe Orlando has been in the good old boys club. He's done enough with collectors and investors to encourage and sort of cultivate the large bulk submitters. And he's a big reason that the company has sort of weathered the storm. You've seen BGS and SGC take some pretty big missteps, and PSA largely came out of the whole trimmed card grading scandal unscathed. And I think in sort of the investment community, they look at Joe Orlando as the guy that sort of weathered the ship or directed them through the storm. So I think the other thing is he probably had a bunch of ideas on what he wanted to do with the company, but without sort of broad board consensus, he wasn't going to get the backing from the board in order to raise the money to make those types of investments. So I'd give him probably a 3 to 5 year window under this new investor group to sort of prove out that he's willing to listen to this new leadership group and sort of be able to execute the plan that Nat Turner and group has envisioned for the company.
That's interesting stuff. Now, CLCT is not just PSA. There's also a line of business that involves coin authentication. Now, Nat Turner, a great advocate, of course, on the sports card side. I don't think there's any denying of that. He's probably got one of the most insane personal collections that exists, and largely PSA graded, if not all PSA graded, from what I've seen. But what do you think happens to the coin business as a result of this?
So my best guesstimate would be that they try to spin the coin business off. What you see when a company gets really, really big, and I'll use HP as an example. HP started out as a technology company. They make printers, they make computers, but then they also have a side of the business that is totally business to business server solution type thing. And it got so big and so decentralized that they were okay at a lot of things, but no one at the highest steps of the company or highest ranks of the company had a clear way to articulate what the strategy was for each of the underlying businesses. So what did HP do? HP rolled out, they sort of carved out the company into two separate public companies. You had the HP Enterprise, which is your B2B business solutions, your clouds, your servers, and then you had the HP consumer side of things. And after they did that, the market loved it, their values skyrocketed, and it allowed the leaders in each one of those business segments to really focus on what they needed to do to optimize the business, the solutions, without having to try and bail the other one out. For HP, it was the B2B, the server side was constantly bailing out a failing computer and printer business. And the printer business was trying to come up with solutions to make a stronger connection to the B2B. When you take those barriers out, you're providing an environment where these companies can flourish on their own and focus on solely the service offerings they're trying to bring to consumers. I believe that they're going to try and do something similar at Collectors Universe, carve out cards, carve out coins, and then try and sell the coin business off to someone that might be interested in it. The coin business is very lucrative, but it's more of a mature market. It's not as there's not as much upside for coins as it is for sports cards. There's plenty of reason to like want some exposure to coins and coin collectibles in your portfolio, but there's a different investor group than sort of your angel or venture capital people.
Good point. Good point. So I know in one of your previous videos where you covered CLCT, you had mentioned that they were using the backlog almost in a way. You presumed that they were using it in a way to control their revenues on a quarter by quarter basis, giving them no real, no clear incentive to completely bust through that revenue and recognize, or bust through that backlog and recognize all their revenue as cards are graded. You had mentioned that the way that they measure or capture revenue on their statements, it's all based on when the card gets graded, not when it comes in, not when it comes out, but when it's actually graded. So do you see that the backlogs there'll be more of a motivation to get those smaller and more manageable and maybe to be more productive in the interim versus, still having that, whatever, is it 11 or 13 weeks in order to get your cards acknowledged and before they go into processing now? And I think at this point, most people assume that the backlog's probably in excess of 1, if not in excess of 2 million collectibles.
Honestly, I think the statements made by Joe Orlando and some of the other people in CLTC's universe was sort of a way to cover their ass. I think a 1 million card backlog just shows how dysfunctional the operation is. Because if you take that backlog away, you're showing investors that there is supply out there that people want to give to you to grade, and you don't have the capacity to do it. So instead of pointing to yourself and saying, we have this giant backlog, we can't work through it, there's value out there, but we can't capture it and optimize it for you investors, we're going to show you like how this is actually a good thing for us. And the elephant in the room is what happens when 1 million base cards hit the market. Is 25,000 copies of a 2018 Luca Prism still going to be $500 or $600 in a PSA 10? Is the PSA 9 going to be significantly lower than the PSA 10? Is a PSA 8 going to be lower than the cost of grading? I think those are questions that we can all sort of theorize about, but we don't have an answer to how the market's going to react. So I think having Nat Turner leading PSA and sort of coaching them through how to bleed that backlog down is going to be very important for the company, but it's also going to be very important for the marketplace as a whole. Because the worst thing that could happen is, all right, we come up with robotics, we're able to grade cards at 10x capacity, and then the market is flooded. You can't find a raw card anywhere. Your slabs, I got a couple here, are worthless. There's no reason or incentive to grade anymore. And then where are we at? We're not going to be able to attract the big institutional money that's currently coming into the hobby. You're going to see collectors like Gary Vee and Logic and Kendrick Perkins. They're not going to be talking about the PSA stamp anymore. What would that mean to sort of those types of folks coming in with hundreds of millions of dollars on the line? I think those are the stakes. So I don't know if it's going to speed up the backlog or shorten the turnaround times at all, but I know that having Nat Turner there is definitely going to be a benefit for us collectors because he's been on sort of both sides. He'll be on the leading side, and he's had to wait before for his cards to come back with the current sort of 11-week turnaround time, like you alluded to.
Yeah, 11 weeks before they're acknowledged turnaround times in excess of 6 to 8 months, unless you're lucky. All right, so before we wrap up, my concluding thoughts are really that there is more good than bad that can come from this. Nat Turner should be an asset, a great advocate. to the sports card world, collector and investor community. Grading fees aren't going to go down anytime soon.
Yep.
Don't expect that the backlog will be completely sorted through, and that issue will be remediated in the next 1 to 2, 3 to 4, even 5 to 6 months. But there's more good than bad that will come from this. Cardi-C, do you have any final thoughts?
I'm excited. There's a lot of darkness in our world right now with COVID, but there's a lot to look forward to. We got a vaccine on the horizon. Hopefully everyone will be in happy, healthy shape for the 2021 National. And this acquisition just is the latest good news to come around. And only time will tell how it impacts us, collectors, investors, flippers, and everyone in between.
All right. Well, that is it for today's segment. Thank you for joining us on the breakdown of the acquisition of CLCT by Nat Turner and Company. And let us know what you think down in the comments. I did leave a link to Cardi-C's channel in the description where he covers various aspects of CLCT. Alta Fox, the activist investor that might have actually helped initiate this and accelerate this movement, as well as him breaking down, I believe it was the first quarter 10Q, the financials, and he really gets down to the detail there. So, but thank you everybody for joining. Leave us a comment, comment, and subscribe. Filmington and Cardi-C are out of here. Thanks, guys.